Hey, Steve, Jamie, what's going on?
Hey, hello.
Hey Scott, hey Steve, what's going on out there, everybody? Happy Monday. Today is the 7th of October. September's in the books, and welcome to the office hours. I just saw Edward's question there. What do you mean by that interesting title of your webinar? Huh, unless he's seeing something that I don't.
Office hours? I don't know.
Yeah, office hours. Eh, you know. You got me on that one, Edward. Um, but
Doesn't translate.
welcome to
Oh,
the office hours webinar. Office hours is on Monday. Steve's going to take the helm tomorrow for the trade of the week, but I get ahead of myself here. So welcome everybody. We always appreciate you guys taking the time out of your day to come and hear what we have to say. I'll be your host, Jamie Hodge. I got my trusty wingman, Steve Gomez, in here as well. But before we get going, just want to take a moment to make the attorneys sleep a little easier. Make sure everybody in attendance is aware of the fact that myself, Steve, Andy, we come in here and share ideas and teach you how to use the software, look for certain specific setups, whatever the case may be. But we're here for educational purposes only. Please don't construe what we share with you as a solicitation to buy or sell securities or anything for that matter. If you need investment advice or you need financial planning, please seek out a registered investment advisor or some other type of licensed person like a Series 7 stockbroker that can legally dispense investment advice to you. So once again, everything that we share with you guys in the 5 o'clock Eastern webinars or any of the other webinars that we come at you with during the week is for educational purposes only. What's up, Mike? What's up, Waleed? Always like to take a little bit of time here at the top of the hour to let the new people know about the community that we fostered around the award-winning Trade Ideas technology. Of course, today's office hours, part of the 5 p.m. Eastern webinar series. But we also have Trade of the Week, which Steve takes the steering wheel for tomorrow's 5 p.m. Eastern webinar for the Trade of the Week, and Andy Linloff is going to ride shotgun with him. Wednesdays, we got Dan Merkin, the Chief Executive Officer and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams. Typically, they like to give you a peek at what's coming down the developmental pipeline. Always interesting with those guys. Then Andy is going to take the helm for Thursday's 5 p.m. Eastern webinar, and that's the Andy's Trading Studio, and I ride shotgun with him. We like to change it up a little bit on Fridays. Got the support webinars starting every Friday at 11 a.m. Eastern, and typically running anywhere between 2 to 3 hours depending on the crowd. What's cool about the Friday support session is that nothing is off limits, whether you need help with basic configuration or advanced strategy fabrication, brokerage plus, auto trading, everything's fair game. And what's cool about the Friday session is you get myself, Steve, Andy, and typically Sean in there as well, all putting our heads together to address your questions. Anything goes. So if you haven't been joining us for the Friday support session, you may want to get on that invite list. Now, I didn't do this on purpose, but I skipped right over the trading room, all right, which is a very crucial element of the Trade Ideas infrastructure here. We've got a trading room hosted by Barry Anderson, and on any given day, it could be 4 or 5, upwards of 600 people in there. Our trading room is free of charge. You don't even have to be a TI subscriber to get in there and see what it's all about. Of course, if you've shopped around for trading rooms on the web, well, you know that they're not cheap, and even if there is a hefty price being charged, that does not necessarily guarantee a quality environment. So what you get with our trading room is a quality environment at no charge to you, and you have a great moderator in there. Barry does a fantastic job not only at moderating a large crowd and keeping everything in line, but also showcasing his trading style and the way that he uses TI to find good plays. So a lot of good stuff, but we're not done yet. We've got the TI University. These are webinars designed to help you get over that learning curve a little bit quicker than not attending webinars of this nature. That's why we call it TI University. 101 beginners, 201, 301, and 401. These run Monday through Thursday, and they start up at 12 p.m. Eastern. So we always recommend that you attend the live versions because if you have any questions, you can get them answered in real time by whoever's hosting that particular segment. The good news is the content remains is static, okay? The content for 101 is never going to change, neither is 201. So if you have time constraints and you can't attend these things in the live format, we've got them all recorded on our Trade Ideas YouTube channel. So you can go watch them as many times as you need, back up, go over different topics until you get the gist of it. And then if you have any questions, you can always use the info@trade-ideas.com, and we'll get back to you as soon as possible with any questions that you have. So we recommend that you watch the live ones, but if you can't, watch the pre-recorded versions and you'll get the same quality information. Trade Ideas and how we have expanded our user base since introducing the AI modules, or I should say the very first AI module, which was released back in the very beginning of 2016. Since that point in time, we've unleashed 2 additional modules. So in all actuality, it's a collective now, but we've got 3 different modules issuing signals. They all have a little bit different characteristics about them. But the bottom line is the AI, since we introduced it, people have responded, and we can tell that because more people are signing up for the system, signing up for the scanner, and using the AI to generate alpha. Now, having said that, we've also released, not too long ago, our Brokerage Plus module, which allows you to take AI signals and automate them if that's what you want to do. That's one of the functions it can facilitate. But also, it's just a really nice trading front end that allows you to execute, whether it be manual trades, automatic trades from Holly, or automatic trades or auto trading from strategies that you've created using our backtester. So as you can see from the chart here, live executions in blue, demo executions in orange, and clearly we don't have to be technical wizards here from a charting perspective to see that the numbers are slowly increasing on the live and the demo versions of Brokerage Plus. So if you do trade at IB and you haven't gotten in there and taken a swing at using Brokerage Plus, highly recommend it. All right, that gets us on over to the content for today, and boy, there's a little bit of everything to be had today, mainly because of the action that the market presented, gapping down, closing the gap, folding back down. So Steve, if you're ready, I guess I'll go ahead and kick it over to you. Take a look at that chart action, and then we'll just proceed from there. So there you go.
All right, giving me the cheat button. Normally I don't click into emails during live webinars. While you were talking, I got one and I clicked into it. And what do you know? It's Charles Schwab. Starting today, we are going to introduce $0 commission for online trades in U.S. markets and ETFs and stocks. How about that? I mean, I don't know if people realize this. We're going to be talking a lot more about it, especially at our upcoming event. The landscape is about to really change in a big way for traders, and it's good news for traders. It's good news for Trade Ideas. It's good news, I think, across the board. It's just that we're giving up the market making function now to basically the matrix. 2 big companies, Citadel and Virtue, are going to be the matrix where all the orders go and come back out. But it's a good thing because trading is a business. It should be treated like a business, and now traders no longer have variable costs that they don't understand, or they're not able to peg each month. Variable costs are hard for businesses or people running businesses when you don't know what your commissions are actually going to be at the end of the month. Well, now traders have a fixed cost, and it's a damn good fixed cost at $0, I might add. So it's a really good thing across the board what's happening out there, across the board, watching all of the brokers capitulate at the same time and basically acquiesce and confess that this is the way it's always been, and they've always been selling your order flow, and they've been making money on that, and they've been making money on you too as well on commissions and fees. They didn't really need to, and they just kind of took that veil away. They no longer need your fees, which is a good thing for everybody. So just wanted to harp on that.
Hey, so you said Citadel. We know that that's Goldman's arm. Now,
no, I
who's
don't
the
think
other
it's
one?
Goldman's arm. No, it's not Goldman. It's he's a very, very rich man. He just bought a $100 million New York City pad, has tons of art. I forgot his name, but it's just it's somebody who set up
Now, who's the other one? You said Virtue?
Virtue, yeah, Citadel and Virtue. These are going to be the two big buyers from Robinhood, and everybody else is now going to play that game. So,
Cool.
all right, so getting back in line here with my contribution is what's happening in the market. And I think we have a little bit more piece of the puzzle. Again, we're wondering, is this going to be a giant double top, or is it going to be yet just another cup and handle? Well, tell you what, today's action is pretty darn textbook as far as I'm concerned. All right, we got down way below our moving averages, got ahead of ourselves, put in a really nice reversal candle here last Thursday, it appears. But what I mean by textbook is it bounced right up into what we call the pocket. And SPY is giving us the best look of all. At one point today, we had 3 nice green candles, but we don't close the market in midday. We wait for the end of the day to draw our daily candles. And it did the perfect wick. When I see a wick like this to the upside after a big bounce, and that wick corresponds with a momentary puncture or movement through that declining moving average, but in the end, at the end of the day, the price action was subdued by that and closed back below those declining. So this picture, I mean, I've been watching this stuff for 30,000 hours, and this picture right here is not exactly bullish. Okay, we had a really big bounce as expected off of that low, but this little wick right here into the pocket is textbook. It's textbook reversal is what I'm getting at. I don't like to make predictions, but I have a real strong feeling we're going to be under some pressure tomorrow, maybe even starting tonight in the futures market. Maybe we can get a head start. We'll see, but I don't like this at all. This is just ugly. This is not what the bulls want to see. So this is, you know, portending more downside, I believe. Let's take a look at the NASDAQ. Oh, by the way, before we do that, let's go back to the SPYs. I wanted to show out the 15-minute. Not only were the moving averages the area at which we had this reversal wick midday, if we look at the 15-minute, this is a big pivot level here. I mean, I don't have to draw it. You guys should be able to see it. Support, 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 resistance that day. For the most part, resistance today. And then here was like the little death knell right here, the last gasp, where the stupid social media was talking about China, you know, tariffs, and pushed us up through that level, and that was kind of the blow off, and that's what the sellers needed to kind of really jump in and take control in the second half of the day. So midday, you know, this is also kind of textbook midday, kind of textbook reversal, especially when you line that up on the pivot level that was support back here last week and the week prior. Let's go to NASDAQ. NASDAQ's been kind of leading us higher, but same thing over there. Real perfect doji. Closed right where we opened. We opened up, gap down a little bit. Same kind of midday reversal through there, blow off top. And that blow off all kind of occurred also at areas of prior resistance for the most part. On the average, on the daily chart there, again, a big bounce off of oversold lows, 1, 2, 3 days. We'll call it 2.5 days because we had a midday reversal. Also a big ugly blow off wick right there in the pocket, and the NASDAQ doesn't look that solid, doesn't look that great to me. Diamond's giving us the same thing, blow off down to the downside, a nice reversal bottoming wick here, and I put just as much emphasis on these top blow off wicks as I do on the bottoming wicks. I mean, I think they're, you know, they're a great tell sometimes when you look at the blow off areas and support. I should say washout bounces at support and blow off areas at resistance. So using the 50-day moving average here, seems to be kind of following that in the Dow. Also a big blow off wick and then closing below 10 and the 20, 10 and the 50 after testing the midday, giving a lot back. And then the one who's been dragging us all along, IWM couldn't even get its blow off wick to shoot through the moving averages. So even more weakness over there. But back to the main guy, which I think we try to get most of our information off of. That was a price alert I deleted. That's okay. I'm trying to delete that. Just ugly. I mean, that's not real. It's pretty if you're somebody who decided to come in and take some shorts, maybe in the afternoon today. That's looking pretty good, pretty confident for tomorrow. But if you're somebody who's waiting for this price action to work itself out here and move higher, in my experience, that's probably not the most likely of outcomes. In my experience, most likely of outcomes when I see this blow off wick up here into the pocket is continued selling and then a retest of the bounce from which it came. So not a whole lot of good news in my opinion, for the bulls. Maybe a couple of days could change it. What could change it? Well, these moving averages are right here. Maybe we don't sell off. Maybe we put a little bottoming wick in there. Maybe we start to try and close a couple of days sideways. That would start to change my tune, but that's going to take 3 days before we get that data going on what we have to go, and that's all we can go on right now. This looks rather ominous to me if you're hoping for higher prices tomorrow. So I'll just leave it at that. Jamie?
Thanks, Steve. Good stuff. As always, let me grab the baton back from you. All right, you should have eyes back on my desktop.
Yep.
Excellent. Okay. Let me get back over here. All right, yeah, so, man, let's just take a look at that one more time. I mean, what crazy action today. Fill the gap, pop back to new highs, and all the way back down. So, interestingly enough, after the first 15 minutes today, I took a peek at my favorite compare count window. Steve, you probably remember me making the that's a gross count comment. And the reason I said it was gross is because we had a small bullish bias here, but only by 2%, right? And, say all the time that unless it's above 55%, the closer it is to 50-50, the more likelihood that anything's possible in the market session today. And boy, when we look at what the market did, a gap fill and then all the way back down again before the day was out, something that you don't see a whole lot, okay? But I mean, upside and downside, if you're holding the long sides for more follow through today, chances are you didn't get it. And if you were holding shorts for additional follow through, unless you held till the very end of the day, it was hard to stay in those as well. So a tricky day all the way around. And the compare count window here, not telling me, hey, this is going to happen, but pretty good at what to expect in the form of, hey, anything's possible today, upside, downside, and that's what the market presented today. So anything goes, and that's what happened with this weak count. Anything ever below 55%, just be prepared for that. Upside, downside's always on the table. Now, getting back around, let's talk about Holly first, because, even though today was a little, choppy, so to speak, even though there was great opportunity out there, just depending on the timing, Holly just kind of treading water today. No big surprise here if we look over here at the channel bar and just kind of tally all these up. Let's just say the 86 covers this up, about $6 in the hole from 86 and 78. Or $8. So that means Holly was up about $48 once we do all the math here, roughly speaking. In other words, a flat, okay? Because right now, even though there is all this commission-free talk, I don't think IB, and I'll just kind of wax about this a little bit because there were some questions coming through. IB was the first broker-dealer to get this whole thing started. I can't remember how long ago it was, 10 days, 2 weeks, somewhere in that neighborhood, where IB was the first big broker dealer to come out and say, hey, we're going to a commission-free model. But they had a little caveat in there. They're like, non-API orders. So let me just kind of clarify, because there were some questions coming through about that when I responded. API is basically what we use to talk to IB through Brokerage Plus, okay? Brokerage Plus here talks to the IB trading platform through what we call an API that they have, okay? Typically, an API is associated with algorithmic trading, okay? But Brokerage Plus is using the API, so it doesn't matter if you're submitting an order manually just because you see something on your alert window and then click buy or sell, or whether it's being algorithmically generated by one of the strategies that we have loaded up here. Everything through Brokerage Plus is going through the API. So at first they started off, and I think this is still their line until they change it. Non-API orders don't count for commission-free. But in the meantime, you've had Ameritrade and Schwab come out, and I was looking at Ameritrade this morning, trying to find any loopholes or anything, and they're just like, nope, free equity trades, ECNs, US on anything listed on the American exchanges. So can't guarantee anything because IB makes their own decisions, but it would make sense to me that they would have to include API generated orders as well if all their competition is doing the same. But we'll just have to kind of sit tight and wait to see, because from our standpoint, our client standpoint, if IB stays with that opinion or that rule, well, then it would make sense to port Brokerage Plus over to someone like Ameritrade. But we'll have to see what happens as things settle out in the commission-free war that's going on between all of the big boys. All right, so now let's talk about Holly and whether or not there was any risk on versus risk off spread in here that we could have taken advantage of. So let me just stretch this blotter out a little bit so we can see everything. Now, as far as Holly's trade count today, we had 32 trades, 23 and 9, yep, 32, nothing squeaked in the last hour there. So on 32 trades, here is the blotter. Let's see if we can see everything. There we go. And I've got it sorted by risk on here for the purpose of comparing the risk on column right here to what we are showing in risk off mode. In case there's anybody out there hearing, risk off versus risk on for the first time, a quick synopsis of the difference between risk off and risk on. Risk off is Holly simply obeying her trading rules like you or I would do. We got a stop loss if we're wrong. Sometimes we have a profit target, and she's got a timed hold, because if we take a peek at the strategies window down here, all of these strategies were designed with intraday hold times. So we got that profit target, stop loss, and timed hold. And we also give Holly the ability to exit a winner or a loser earlier, before she gets stopped out, or before profit target gets hit, or before the timed hold is up. If the position isn't doing what it's supposed to over time, then she can execute what I like to refer to as an audible here in the form of profit save and reduce risk. So all of those 5 reasons that she could exit a trade, those are all part of the risk off mode. Now, risk on is simply if we ignore her exit and choose to stay in it, would we have made more or less? And so by sorting by risk on, we can see the spreads. If risk off is less than risk on, well, then there was definitely risk on opportunity there. So hopefully that makes sense to any newcomers. So on with the show here. First up, we've got a nice 42-cent spread on this SMAR trade. And here we are looking at 5-minute candlesticks here. The entry line in blue is Holly's entry signal at 39.29. Not a bad entry here. We didn't really have to set a lot of pain here. Stop loss is down here at the red line. We get the entry right here. For the next 5 minutes, we kind of just toe the entry line there, about flat, maybe up a few pennies, before we get that first lift. So let's take a look at Smart's volume today. And of course, like a lot of stocks out there, a lot of nice patterns today that are typically associated with higher volume, not necessarily true today. We can see the SPY barely finished at normal volume at 0.99. And I noticed a lot of these plays, whether it was Holly generated or from some of my favorite personal tickers, some of them had a little bit higher than normal volume, but it was just kind of an average volume day. Of course, there are always some that are going to be doing higher volume, but Smart finishing the day at 0.86, which is slightly less than normal volume, but a good move nonetheless. But it didn't, it wasn't just straight up. So we can see right here, the shaded area is where Holly went the duration. Didn't exercise, reduce risk, or profit save, didn't get stopped out, profit target didn't get hit. She made it through the whole timed exit here, which was from bullish pullback. And we can always reference bullish pullback here and see what that one's designed around. 45 minutes right there. So after 45 minutes of not being stopped out or hitting a profit target, she closes it out right here, which at the time looked like a pretty good exit when we see what it did over the following 20 minutes. Now, what I liked about this one initially, not only do we have a nice signal down here, which immediately gravitated up, but we also have what was going on right here. This was the open, so we did have a nice little run. Buyers are definitely present. Then we got this nice little consolidation area, and this one gets basically bought on the pullback. And then immediately we go up here and we break these highs again, kind of cycle around here, take another little dip. But notice how it's uncanny how we're hugging that line right there after we get that range break. Just kind of ebbing and flowing. Does it again over here. So even though this isn't the prettiest chart, there were a couple of times, if you're in this one and you're feeling it out and it's like, you know, it's taking its pullbacks like stocks do, but it's holding up. Eventually, another move higher here before that last little pullback and then finishing stronger into the close. So in essence, whether we choose to add to the positions at these levels up here or stick with what we have with Holly, it's just as simple as going, you know what, this position's been working. I can see the AI making its exit because that's what it's programmed to do. But all we have to do is go, you know what, I like the way it feels. It's been holding up. I'm going to stay in it, take a little bit more risk, which is the whole concept here. We're taking more risk in hopes of more reward here. So this one, we could have stayed in the whole lot with Holly, or we could have bailed out of half of the position with Holly, locked in the profit of 40 cents. This is one that we could have kept a break-even stop with. Typically, that's a very popular methodology, whether it's a Holly generated trade or one other trade from various windows that we've taken. We're moving up. It's good. I think it might have more juice in it. I'm going to lock in profit on my first half. I'm going to set my second lot to break even. If they roll it over and get me out, I still have a winning trade on my hands because I locked in the profit on the first lot. Okay, so you're guaranteeing a winning trade by staying in and keeping that break-even stop intact. Sometimes the break-even stop keeps us in, sometimes it does not, but in this case, would have kept us in for the duration. So we had 42 cents there, a little bit more here because Holly did exercise her profit save on this one. So we got a 47-cent spread in here on light. Entry signal from Holly right here. You can see what happens. We get in the money a little bit and we gravitate back down to the entry line. So this is kind of classic. A lot of the times, even if we just get some flat line action without any upward momentum, this is when Holly's going to exercise that audible, because the longer she stays in the trade and it's not heading in the direction that it's supposed to, the more likely it is, or she is, to use the profit save or the reduced risk audibles here. We can see that's exactly what she did here. We get out of the money just for a smidge, but then before too long, boom, buyers take control back and we're back in the money again. So, you know, kind of regressing back around to my compare count windows, that kind of shifty reading that we got earlier. When I see readings like that, not only does it tell me that anything is possible, upside, downside, but it also is a pretty good indicator. You know what? If you're going to take AI trades or any other trades for that matter, it's probably in your best interest to stick to your hard-coded stops, because the one that we looked at before didn't really visit the entry line again, but this one did. Still ended up being a nice winning trade, just kind of danced around the entry line a little bit. Holly even got a little bit nervous and closed it out, but still it came nowhere close to our hard-coded stop here. So especially on days like today where anything could be in play, always a good idea to stick to our hard stops. Now, I will say this. We could have been in this trade in real time with Holly as it came out, but many times, most of you are not going to jump on that trade immediately unless it just looks really good, and then you got the statistical probability of Holly behind it. Maybe it's doing volume, maybe it's exhibiting some other characteristic that you like to see in your charts, okay? But in this case, Holly flatted the trade, all right? And how many times have we been there and done that, where we just like lose faith, flat the trade, only to have it work in the end? So another good habit to get into, sometimes we're going to take the trade with Holly, but some really good entries can be made watching for when Holly closes out on a profit save or a reduced risk. So we see Holly closing the trade out. We're not even in this trade. We see her, we see our screen flash. We're looking at Holly. What did she just do? She closed this one out on profit save. Hey, it's right there where she bought it the first time. Even down here, we can get a better price than Holly. All right. So just keep that in mind. Also, it you know, it got a little bleedy through the 10 period there, but we're looking at 5-minute candles here versus 15. So if we go over here to the 15, does it look any better? Yep, above the whole time. All right. So keep that in mind. I was looking at a little bit smaller time frames today because it was hard to see some of the patterns emerging. But on the 15-minute, well above the 10 period the whole time. So sometimes by watching when Holly gets out of a stock on profit save or reduced risk, we can actually use that as an entry and sometimes even get a better price than Holly. All right, now the next one here is a short sell. And this one is the same type of setup here in the form of, well, can't say the same type of setup. Holly gets out on a reduced risk. So here she initiates a short sell, hoping the stock is going to go down. We profit that way. Look what happens as soon as she shorts it. Takes a little leg up, comes up here and pokes just above that 10 period. Boom, comes back down. And by the time she gets, her patience is worn out right here, she closes it out. Now, we probably had just a little smidge of time here if we saw her close that out on reduced risk to get the same or maybe even a little bit better price here. So when she closes them out on reduced risk or profit save, they're always worth taking a look at. Not to mention that during the time that she was in this one, she was out of the money a little bit. So, you know, it's always a good idea to monitor Holly, see when she's getting out and reduce risk or profit save and see if it's just taking its time, a little consolidation in there. But, you know, when we see things like this, we see Holly out of the money. We see these wicks being put in here. We start to see a regression back to the entry line here. Well, we can kind of take this as a little bit of confidence here. They tried to take it up. Buyers could not stay in control. So maybe we just weren't paying attention, or we can get a little bit better price than Holly. So this is definitely a viable way to make entries. We see it day in, day out. So just keep that in mind. And of course, once we got a little bit of traction through here, adhering to that 10 period line all the way down. So a big difference between 2 cents and 31 cents there, another 9 cents on the table. Or excuse me, another 29 cents, I should say. And we'll take a look at AVYA, which this was a duplicate from here, but this one was the first one, okay? Notice how we had AVYA down here with signals at the exact same time, quarterback coming from 2 different modules, but this was the first one that was signaled right here, okay? So a nice clean entry signal at 1383 there, and a little bit of a drawdown here, which once again, you see Holly in a negative position, doesn't necessarily mean that that trade is not going to work. Sometimes we can get a better price. You know, Holly gets 1383 here. If we were monitoring this one, could have picked it up around 1360, 1370 as it comes back up to that line, and we get a little bit of a push right here, and we get a little range break. But also too, notice the 10 period here. Yeah, we came down a little bit. It didn't work immediately, but boy, it bounced really nice off that 10 period there. So just keep that in mind. We don't have to jump on Holly plays immediately. Sometimes they're going to go. Sometimes she's going to pull the plug early and reduce risk or profit save, and that allows us to sometimes get a better price than Holly. So keep that in mind as you move forward and interact with the AI. So 28 cents there, and then we can see things start to wane here. Not a bad little short here. A little bit of pain had to be sit here on this HR here. So we had -1 versus 21 cents. Not quite all the way up to the stop out area. So once again, if we're watching this when Holly makes the play, we see it looks like it looks, you know, before these bars right here are present, we're like, ooh, this one's looking like a stop out. Of course, we see this red candle put in, then we see this little area of consolidation right here. Could have gotten a little bit better price than Holly, and only to see the trade work out later. And that's pretty much it for risk on, risk off from Holly today. If anybody has any questions about risk off or risk on, just go ahead and throw them into the panel there and I'll answer them. And now, oh no, please come back. All right, they came back for me. That is one of the annoying things of Windows 10. If we shake our window around, for some reason, all the other windows want to close up. Steve and Scott and I were just talking about all the things we don't like about Windows 10, and that is definitely one of them. Okay, so moving right along here, there's been a lot of talk about our paper trading module, and myself and Steve and Andy, Michael, we've all been working diligently, getting the bugs worked out of paper trading so that we can get it released to you guys. And there have been quite a few bugs in there, but I'm just going to pull my Brokerage Plus over here so that everybody can get a peek. Now, what we're seeing right here are some trades that I've been letting pile in. Looks like my earliest date here was the 3rd of October. I had started letting trades accumulate in here earlier, but due to bug hunting and having to reset and clear out my my Brokerage Plus paper trading module here, not near as many trades on here as I would have liked to have had, but still a good little sampling of some of the strategies that we talked about last Monday, and seeing how they play out in a real-time environment, because we can watch a back test and we can review the back test, but until we see things actually playing out in real time, there's a little something missing, which is why it's so cool that we're about to release this. And you might be asking yourself, well, when are we going to get our hands on here on the Brokerage Plus paper trading? And hopefully soon. I could say a week, I could say 2 weeks, I could say 10 days, but it could be sooner than that, could be a little bit later than that, just depending on how the bug flushing goes. For a while there, we'd make a trade and it would tell us the strategy name that issued the trade, but the next day this would be gone. For a while there, the time stops. The day would come up to make the exit, things would get a little bit wonky. So all of those things are working properly now. Got a few more things to work out, so hopefully sooner than later. Seeing these informational columns keep the data is kind of important here. And if you recall, we talked about, and of course my little shake there did get rid of some of my windows here, so bear with me while I searched. There we go. Okay, so for example, you might notice that most of the positions in my Brokerage Plus module here in the paper mode are coming from the 250 short, which we talked about last Monday. So interestingly enough, when we take a peek at what the market's been doing over the past 3 days, once we put that bottom in, came harrowingly close to that 200-day moving average, we've had nothing but upside for Thursday and Friday, and looked like we were going to have more upside today. But of course, we put in the topping wick, and we'll see what happens tomorrow. But in 2 days of action like this, what I'm finding amazing is here we have a all short blotter, and we've got a lot of green on it. All right, we got a little bit of red down here. We got TNK, which was a significant loser, but this trade was submitted before the strategy names kept the names. And just for the record, this was from a different strategy. I believe it was my noonday bottom feeder that we were kind of looking at a couple of weeks ago. So the point I'm trying to make here is that if you take this one out, all of these are from shorting a 250-day high, all right, from this window right here. So this is really the first time that I've gotten to throw a strategy of this nature in here and just see what happens not in real time, but pretty close to it, which it's kind of eye-opening because, well, here we are, having 2 large green days, and you think to yourself, well, the back test shows me that it might not be a bad idea to fade these 250-day highs for a 2, 3, 4, 5 swing day hold, but you never really follow them that closely. And that's the really cool thing about Brokerage Plus is when we have an idea like this in the future, not only do we not have to jump through the hoops of having an account in IB that's funded, and then we want to use live data, but then even if you don't want to fund the account with a lot of money, you got to pay for the data, all that good stuff. This just breaks down all those barriers, so we can immediately load something into Brokerage Plus and let it hunt And that's going to give us the conviction to go, you know what, I think it might be time to put this in a live environment, or you know what, it was a great show, but no thank you. All right. So here we are looking at the backtest results here, and I'm just going to pull up the calendar. And you know, we first talked about this strategy back here on Monday. All right. Now, of course, these only show up once the trades have been closed, which that's why we're not seeing anything in October yet. But slowly, we'll start to see those days fill in. But it's been real interesting to see what happened since we first brought this strategy to light on last Monday. It's been doing pretty good here. All right. And, you know, I was talking about this with Michael earlier, and he was like, well, what is a 250-day high? And when you think about it from the perspective of 20 days, typically in a trading month, we're at about 240 trading days in a year, give or take a few. All right. So this is looking at shorting 250-day highs, which tells us something. Well, they pop that yearly high or 52-week high, 240-day high, whatever you want to call it, and they get a little bit of a run, and then they start to give back a little bit. And in any case, that's what I'm deducing from this. And once again, I didn't just pick 250 days here. I started very low on the totem pole of days, and I found out that every time I raised the number of days up, the results got better. Then I went past 250, went up to 300, the results got worse, and it just happened that 250-day highs and fading those yielded the best results, okay? So, you know, once again, the odds maker is a great tool because sometimes we know exactly what we want to try to find, and sometimes it's good, sometimes it's not. But other times we can just pick a random metric, whether it's a new high or a new low, and just put numbers in there and run them and go, okay, is it going to get better or get worse if I do this? Is it going to get better or worse if I do this? And then we have something in which we can go down the rabbit hole of optimization and see if anything viable might be there. So sometimes the best strategies are created out of completely random things that we just get these, I can't say wild ideas from. And in this case, it was a very simple idea. Is there anything out there with new highs that might be a nice contrarian entry for a nice swing trade strategy? And this is the result. And now we can just pop it into Brokerage Plus, let it hunt, watch the way it exits when the days are over, because there's going to be a lot of fluctuation in here. Today's P&L was all the way up to slightly, at one point, right at 300 and change, all right? And we backed off 2 points. But when we look at how this thing's been progressing, holding the full time, which is approximately 5 days, 5 trading days. And that's what the odds tell me is the best. You go lower, not so good. You go longer. Actually, I haven't even tested this out for longer. I just said, you know what? I want to try to find something that's good for a good, solid, weak swing trade. And so far, it's working out pretty well. And one of the other positive aspects about this little strategy right here is that I started off with very strong volume metrics in the form of something very simple. And just by stating, before I even put anything in play, before I did any back testing, they have to do 1 million shares a day over the past 3 months. If they're doing 1 million shares a day, you know that they're going to be fairly liquid, and most of the time, but not all the time, they're going to have reasonable spreads, right? Of course, spreads can widen up every once in a while, but for the most part on these stocks, they should remain relatively reasonable. And when we start looking at these entries, not too shabby. And you know, what's encouraging here is we're seeing this consistently. We've got decent metrics down here that show us what our biggest winning day was, biggest losing day, and you know, win streaks and losing streaks with a fairly even distribution of winning days versus losing days. Also too, fairly liquid stocks. We're just kind of cruising through some of the entries here, so it gives you a good idea of what they look like on the daily. Boom, there's one on STI, BBT. Of course, some of these are going to look very similar. Some are going to be a little bit more stretched out than others. SBRA, and not huge winners. Some of these are going to be big though, considering the fact that in this back test here, we're only allocating $500 per trade, which isn't a whole lot of money per trade here. So, also too, the theory about swing trading is you really have to back out, and it's always a good idea to minimize your share size or what you would typically go into on an intraday trade so that we can have wider stops, either based on the criteria that you're seeing on the chart, or in something like this, running a nice wide stop in the form of a wide percentage value, which in this case is a 5% stop loss. So we decrease our share size or dollar amount going into the position, and we give ourselves wider latitude on the stop, whether that be on the daily or just from a straight up percentage value in your back test. So some really good results from that. Plan on doing a lot more scanning for swing trading type things to keep you guys in the loop. And so what I'm going to do here is I dropped this in the chat area last time, but in case anybody needs it again, I'm just going to pop it back in there. No custom formulas, nice and simple. So something to keep an eye on here. And we will all see together if this thing holds up and keeps working.
Ooh, big question from Anthony just came in addressed to Jamie.
All right, what do we got here? Let's see. Well, is my questions panel functioning? Yeah. Yeah, not only is GoToWebinar making it hard to grab the panels here, but my time stamp just got flipped for no reason here. Okay, let me read your question here, Anthony. Okay, so yeah, after the first 15 minutes is when we got this metric right here, okay? Now, are you telling me that CC was extremely positive 70s and 80s? Now, okay, you're talking later, okay? Well,
maybe a refresh was
yeah,
done a refresh.
because here's what you can do. You can take a compare count window after that first 15 minutes, and then you can duplicate it, right? And when you duplicate it, and by the way, dang it, my window's all disappeared here. Give me a second here. Okay. Okay, there we go. All right, so let's say we were watching this. We saw this reading after the first 15 minutes. The only way, well, it would take a lot of buying to get that thing up to 70 if you didn't reset it. Now, sometimes that happens, all right? But a lot of the times, let's say we see a mediocre reading after the first 15 minutes, and we want to keep tabs on what's happening in the second 15 minutes. Anytime you duplicate a compare count window, what's going to happen is it's going to start over, all right? So keep this in mind. Let's say tomorrow we see 56% to the upside, and we're thinking to ourselves, that's a pretty good bias. It's above 55%. Maybe we're going to trend higher. So I'm going to do this. I'm going to duplicate the window. This guy's going to keep his original count, but this guy will start over. So this guy's going to be keeping count for the second 15-minute block, or whatever size block you want it to. It could be 5, 10, 15, 30. But at the end of the second 15-minute period, we see this guy who's only looking since that second 15-minute period began up at 70%. That would tell us that, yeah, we saw 56% in the opening 15 minutes, but it seems to be accelerating in the second 15-minute. If we blank this one out, and at the end of the second 15-minute period, we got a 70% reading, okay? So I see what you're saying there, Anthony. So if you want to continue to track momentum after the first 15 minutes, just give it a right-click duplicate, and then see if what you get in the second 15-minute period jives with what the first one was, or if it's higher or lower, okay? Now, having said that, it's not something that I typically engage in, because I find the most value at just seeing what the read is after the first 15 minutes, because that's proven to be pretty valuable for my perception. Of course, sometimes we'll see compare counts 65 one way or the other, and we don't get any follow through. A lot of the times it's to the downside. If there's no room on the daily, even though we might have a good CC reading, well, we're all at the mercy of the charts. We either find resistance or support, or we blow through it. So keep that in mind as well. So, the CC windows to me are like having a weather vane, or, something that tells you how fast the wind is blowing versus just, licking the finger, sticking it up in the air. It's a little bit more of a scientific method. But it is uncanny how these things can help us gear our expectations for the trading session. Today, if you're of the mindset, well, this looks good, I think it's going to trend all day, more than likely you were sorely disappointed. Doesn't matter if it was a long trade or a short trade. All right, there wasn't a whole lot of follow through today. So take that for what it's worth. Okay, well, here we are, 4 minutes till the top of the hour. I did have some nice setups for you guys, but since we're out of time, I guess I'll just save those for the next time, or maybe we'll fold them into Andy's trading studio come Thursday. But I do want to thank everybody for popping in today. I hope you got some good information. Hopefully we're going to have the Brokerage Plus paper trading module active on the latest beta version sooner than later. Might even be by the end of the week. Don't hold me to that, but we'll keep our hopes up.
We're going to have to redefine the contest, I think, aren't we, with that new tool?
That is a very good point, Steve. It might be
thinking about that.
It might be, instead of just single stock entries, maybe we fold algorithms in there as well. We'll have
for the next test drive, that is. Yeah, I'll have to think about the rules on that and how that might work.
Exactly. Or maybe we'll have a single stock contest and an algorithmic contest and have two categories. All right.
Sky's the limit.
Scott will have a say about that, I'm sure. So Scott,
that really depends on how much judging y'all want to do.
That is true. That is true. We'll have to put our heads together and figure out what's feasible.
Yeah.
But good idea.
It ultimately is up to the judges on what we want to have in store for the contest. But yeah, thanks everyone for joining us. We do have a summit coming up in October, the later half of this month. So if you can make it to San Diego, come on down and use the trade-ideas.com/summit page to secure your ticket. If you can't make it in person, then go to the live stream and landing page and register for that so that you can learn how to watch us live. We've also got a new ebook that is available, and you can subscribe to get that at the /setup landing page. Just go to trade-ideas.com/setup, put in your email address, get the download link, download links, all of that delivered directly to your email address, and also immediately as soon as you subscribe to that. We've got a podcast that comes out weekly, so go to any podcast application and search for Trade Ideas Podcast and get that. We've also got a 15% discount code that you can save on. Summer end, it's the end of summer, so go ahead and use that. It's good all the rest of the month. 15% off any subscription or Brokerage Plus or any upgrade from standard to premium. So if you're on a standard Trade Ideas subscription, just go ahead and use that to upgrade. Any questions, email us at info@trade-ideas.com. It's the best place to send any of your questions. It goes right into our help desk software, gets routed to the appropriate team member to answer that. You can also follow our team. At QuantBot is Steve Gomez. At QuantBot is Jamie Hodge. Today Trader is Steve Gomez. And at Trade Ideas is another place to look for us on Twitter. You can also go to Trade Ideas Pro on Facebook. That's a place you can follow and share stuff on both Facebooks. So we're going to have this recording up later on tonight or tomorrow whenever it's done processing and uploaded. So keep an eye out for an email tomorrow from GoToMeeting about that. Thanks, Steve. Thanks, Jamie. Thanks, everyone. Have a great afternoon.
Yep. Thanks,
See you tomorrow.
everybody.